A very pleasant morning to you. This is the Mainland Business Cafe on Mainland 98.3 FM, the sound of Lagos. My name is Rioja Opia. And of course, today is the 2nd of June, 2025. Time check is 15 minutes gone past the hour of 11 a.m. here in the city of Lagos Metropolis. It is a very, very fantastic new week. Happy New Week and Happy New Month to you, dear listener. As usual, the ultimate goal of this program is to help every listener to make smart choices concerning investments. And of course, we would be providing you relevant updates from the frontiers of the business landscape. Now, from the desk of the Mainland Business Cafe, which happens to be your show guide to the world of business, the focal point of this morning's discussion will be an analysis of financial inclusion in the Nigerian economic landscape, just as we told Victor Achibong, its meaning, significance, and possibilities. And of course, our guest is already here in the studio in the person of Mᴜɪᴜ who happens to be the head research at Ancoria Asset Management. So financial inclusion is a very, very broad topic, and of course it is defined from the Nigerian context as an ideal state where adult Nigerians have easy access to a broad range of formal financial services that meet their needs. So access to financial services by a broad spectrum of any country's population would accelerate the pace of growth and development. So there are so many questions we're going to be asking now. What is the role of financial inclusion in promoting economic growth in Nigeria? What are the factors affecting financial inclusion in Nigeria? And finally, what is the major determining factor of financial inclusion? So all these and more we shall discuss. But until then, we crave the indulgence of every listener to please follow us on Facebook and Instagram at Mainland 98.3 FM, on X, formerly Twitter, at Mainland FM. For those of you outside the shores of Lagos State or outside Nigeria, you can simply connect with us via the Radio Guardian platform. You simply log on to our website, www.mainlandfm.com. Once again, my name is Rioja Opia, and this is the Mainland Business Cafe on Mainland 98.3 FM, the sound of Lagos. And we're most definitely your show guide to the world of business. Please stay tuned. We'll take a break and come back to continue with the program.
We are the voice. We are the info. The convo never stops. This is Mainland 98.3 FM, the sound of Lagos. This is the Mainland Business Cafe, your show guide to the world of business.
Check is 18 minutes gone past the hour of 11 a.m. And of course, just as we established earlier, we have Mᴜɪᴜ, the head research Ancoria Asset Management and Endless Possibilities. Now, as an opening salvo before we bring our guest on, is still excluded from the established financial system. Now, lack of access to financial services, credit facilities, insurance coverage, and investment opportunities inhibits economic growth and efforts to reduce poverty. So it's very important, because last week, and what has he achieved? We talked about this and more, but now this time around, we're looking at it from the business angle for platforms, Facebook and YouTube respectively, at Mainland 98.3 FM, our respective social media handles. Good morning, Mᴜɪᴜ. How are you doing?
Good morning, Rio. I'm fine, thank you.
Thank you for ordering our info. We're hoping that with your expertise and your level of experience, you're able to bring it down to its barest minimum for us to understand and possibly look at it from so many perspectives and standpoints. So first and foremost, what is financial inclusion?
You've defined it twice already.
Okay, so
it already. It's just when people have access to affordable financial products and services. And when we are speaking about people, we are mostly looking at the underserved part of the population. We are mostly looking at low-income earners. We're mostly looking at small-scale businesses as well, MSMEs as well. So when those kind of people have access to very affordable financial products, I think things we're able to do them responsibly through financial inclusion. But over time, you see that, that's would I say that euphoria or that excitement starts to dwindle? We don't see that continue. That growth has not been. There's a reason why that growth has not been sustainable. So World Bank says it has to be sustainable. It has to be responsible. That's when you can. Financial inclusion rate was around 40%. But I think we've seen significant growth. Now it's around 24 to 26%. So which I think is still good, but I think there's still a lot of penetration.
98.3 FM, the sound of Lagos. And of course, we have joining us this morning here in the studio, meaning, significance, and endless possibilities. So now, it has come to our attention that a lot of people, like you said, the underserved, like that's why I decided that you should simplify it more. It's well grasped and understood. Now, I'm sure you're familiar with the Nigerian financial system. 2020 is a comprehensive and strategic roadmap and framework for transforming the Nigerian financial sector into a development catalyst that will enable Nigeria to become one of the 20 largest economies limited and the FX market. I mean, just last month, anyway, we're going to give that update as the program progresses. Just last month, I mean, there was this stability in terms of our local currency when you juxtapose it with the major international currencies in the money market. And of course, as of now, 16 Naira 3 BVN. I'm sure you're familiar with that. So we're going to talk about that as well. So, but first and foremost, let's move on to some other...
So I would say that I just wanted to also add, a lot of times when we also talk about financial inclusion, with that slows the pace of financial inclusion. But aside from that fact, the issue is also that we have a very large informal sector in the economy. So it's been, we've seen that a lot of fintechs, and I think as well as the central bank, the government, they've actually a situation where fintechs, the boom of informal sector a lot more. So I think they said formalization now is around 45 to 50%, which is a really impressive number. So like I said, financial inclusion brings about increase in savings. Most times those two work vis-a-vis. If you have higher savings in your economy, you will be able to further financially include your people. But like I said, the very high inflation rate that we've had has not really been able to help people save. Another thing is that we've had very significant issues with infrastructure. So when I mean infrastructure, I mean things like internet access. But I think we've seen that improve significantly. They said mobile subscriptions. I think that's 50% of the population having access to this thing. So which is fair to be honest. But I think in terms of things like power supply, that has been very significant. That's been distorting how financial inclusion should continue to grow in the economy. So you see that products that are very affordable. So one thing is that domestic savings rate to grow. So if you take a look at the US, for instance, you see that that significantly improved the savings rate. So you would see that except for this year, from 2020 to 2024 in the US, the economy and all of these things work hand in hand together. So another thing you would also want to look at is the fact that we've had very would I say our capital allocation has been very weak in the economy, formalizing the economy enough. That means there's not enough capital that is being run in the financial system. And if there's not enough financial capital in the financial system, the economy cannot necessarily grow. That means that businesses that would need capital to grow, but I think one business, it takes them over.
As I recorded, yes.
Exactly. So it's been very tough on business into the informal sector. The more we are able to grow as an economy. I think another thing we also want to note is the rise of fintechs that we've seen. I think that has been very important. That has been very beneficial as to how we've been able to formalize the economy and bring those informal sector capital daily on a daily basis. Fintech. So imagine if we have rise of more fintechs, and we've seen that in Nigeria we have about 5 tech unicorns. There still remains that market that is quite undertapped, and if you hear most of these tech CEOs talk about the finance sector, they still talk about the fact that our total addressable market is still very large. There's still a lot of untapped products, and that's why you see the likes of Money Points, which just came up how many years ago on data. There's still a lot of financial
FM, the sound of Lagos. Of course, Aurelio Adetinde, who happens to be the head research at Ankoria Asset Management, is our guest. Possibilities. Additionally speaking, this program is being streamed on our Facebook and YouTube, a radio facility at your beck and call. So let's move on at a glacial pace. Time check is 11:29 a.m. this morning. Okay, so now I just wanted to bring to your notice now. Let's go back to the FSS 2020, which are the financial services industry in the Nigerian Exchange Limited.
So you're talking about financial services sector, participation, contribution to the exchange, stock exchange now. I mean, I think over 60-70% of the Nigerian stock exchange.
As opposed to the oil and gas sector
those are not very liquid sectors. When you talk about liquidity, then you look at the banks. The banks are very liquid. They a lot of private placements to, expand their capital base. So
okay.
that has even further helped them. We've seen that, for instance, I think 2 weeks ago, UBA last week to the exchange. So, listing more shares, it makes them, increases their liquidity, so to say. So, and the thing is, I think it happens worldwide, because when you take a look at foreign investors and what they look at when in Nigeria, you see that globally, everybody's financial sector is always very liquid.
Wow.
It's always very liquid.
And let's not forget the fact that bank recapitalization, the fact that most banks are trying to increase their capital base.
Their capital base. So that
fantastic.
has, further with some rights issues as well. So you would start to see them add, to their shares outstanding, and so to say, their free float in the market becomes increased. Because another thing is that you can have, high shares outstanding, but there's a difference between shares brought in those shares into the market.
Okay.
But a lot of times you will see that banks have very high shares outstanding and very high free float.
Wow. Thank you very much. It is still the Mainland Business Cafe that so many Nigerians now do not even have access to even healthcare.
Yeah.
HMO. And there are some companies now, of course, I don't want to mention their names. I don't work there, so but I get in touch with a couple of people who tell me that they do not even have access to HMO. And this is part of the financial inclusion that we're talking about. Some companies don't even to their PFA. And so this for me is a major concern. So how do you think we can address all these?
We first need to see regulation being ahead of the curve.
Okay.
I don't know. I would try to break that down.
Okay.
So regulation needs to stay ahead, in a way, stay ahead of innovation. I know developing things so fast and everything, but I think regulation still needs to SANEF that has been, which is the shared agent expansion it does with, banks. Banking happens when, you're, for instance, I am a bank and I have access to M쏘ɪᴜ. If a fintech comes or another financial institution comes, I'll most likely know one banking model that's been approved in Nigeria right now. So which means that to recollect it from that customer. So say for instance, I want to get a loan from
in fact, you just stole my next argument, because I was going to ask you about that. Thank you.
So say I want to get this, do all your KYC documents and all of those requirements and everything. But in open banking, I don't necessarily have to do that. It kind of even makes the process of financial inclusion much more seamless. So I think drive, financial inclusion going forward. So another thing I would also say is that, supply and panels in order for them to be able to, conduct their transactions without any, private sector, developments trying to put all of these things in place. So that has somewhat helped, how people have been able to access some of these services. So one thing I would say is that, better infrastructure, make people more aware of these kinds of financial products. So in terms of financial literacy, I think we still continue to see that remains quite low. So if we see that, the central bank is doing a lot more to educate people, and I think I was recently reading a report where the person said, oh yes, we're seeing that, a lot of fintechs are coming on board, but sometimes, you tell us to download these apps, maybe the Momo app or something, or one of these mobile. So if you are seeing a lot more in terms of financial literacy, I think it will further help to increase financial inclusion.
Wow. Amazing. It is still the Mainland Business Cafe on Mainland 98.3 FM, the sound. Globally speaking, the financial inclusion in the Nigerian economic landscape, its meaning, significance, and endless possibilities. The head research at Ankore Asset Management, in the person of Oreoluwa Odetunde, is our guest in the studio. Additionally speaking, this program is being streamed on our Facebook and YouTube pages. Drop your comments on both our YouTube and Facebook pages at Mainland 98.3 FM. Okay, so now I know I don't want to sound like a broken record. I don't want to sound repetitive, so I just want to ask further questions. Now, in the aspect of loans, you talked about the fact that some banks who might want to conduct an investigation, victims of customers running away with their money, and then you're credit worthy. You understand? So because I had a friend who recently went to the bank seeking to secure or acquire a loan, and he was told that sorry, we'll only give it to SMEs and not where I get my monthly salary. So can't we just reach a consensus where you would deduct this particular amount and for a period of time, so that I know that, okay, fine, and I'm going to pay with interest. With the advent of BVN, so I have multiple accounts, so you can even check my other bank accounts. I know you have that fast.
For the banks, we would see that generally all the major banks that we know have reduced their lending activity banks.
Okay.
And, when you have those kind of people, they are the major financial like that.
Okay.
It will negatively affect the economy.
Okay.
So I just want to take us back to, the story of, Skybank or, that I'm talking about the loans, the kind of loans that they were giving out to their customers. A lot of them were becoming, they were having to impair a lot of those loans. So there's something we call stage 3. So stage 1 is that, you're still able to service your debt from time to time. If you take that loan, you're still able to service it from time to time. Right. Stage 2 is that, I think you've been missing some payments. Maybe you've been having some late payments and everything. So I feel that your loan is becoming more risky to me. And it's not my asset as a bank is my asset.
Yes.
Because I'm making money off people's money.
Okay.
When you're looking at deposits are liable, paying up your interest on time and everything, I'll classify you as stage 2. Stage 3 is more like the end stage. That means you're not servicing your debt. You're not, repaying, you're not making any prompt payments and everything. And, your principal is adding so much interest to your principal, and if a loan is in stage 3, it starts to affect the profitability of that bank. Okay. So as much as possible, you will see that banks over time they've increased their risk, able to take on very quality, to make sure that their asset quality is very high in terms of the loans that they give. They are sure that these people are able to pay back, and that's why it brings me back to that statement of your friend saying use and all of those kind of things. But so what I would say is that in terms of so generally, when we now look at the loan to asset ratios of the banking industry, I think before, when we look at the 2020, as of 2014, 2013, it was still about over 50%. I think about
10 to 11 years ago.
Yes, exactly. But now what we're seeing is that ratio has reduced significantly to 30%. So that's why a lot of people are looking away from the banks, and that's why the fintechs are also making a very huge boom, a very huge expansion. Okay. So fintechs,
and they're also using that to their advantage as well.
Yes, exactly. Yes. Because individuals, low income earners, individuals and everything, I think a lot of times they turn to these fintechs to
for assistance for financial institutions.
Exactly. And you see that because the fintechs as well, they know that they are able to give these loans really fast. You see a lot of times they'll tell you within 24 hours you get this money and everything. But what you notice is that the interest rates as to which you've been charged is policy rate. The monetary policy rate is 27.5%. It's already very high.
And the Apex Bank is working tirelessly and effortless.
Reduction to one single digit, I think, is going to be very difficult.
Yes.
Now, all those funds back into the banking system to be able to properly utilize it. Okay. And you see that one reason why the monetary policy has not been very effective is because our economy is still not yet very formalized. Like I said, the informal sector is still very excluded. So if they bring them in, you'll see that monetary policy will be more effective. If monetary policy is more effective, they'll be able to bring down inflation. If they're able to bring down inflation, you'll see that interest rates will start to come. Exactly. So, goes back to what your friend is saying, the base interest rate is already very high. And they don't want to also incur. And another thing is that they have a regulation. They have several
strict regulations. Yes.
Thank you for adding that. Yeah. They have very strict regulations with the central bank. So you see, they will say their non-performing loan ratios cannot be more than 5%.
5%, okay.
Exactly. So they are also trying to manage the fact that their NPLs cannot be. So the central banks prudential.
Yes, ratios. Exactly. And of course, it can attract punitive measures as well.
Exactly.
Wow.
Exactly. Really. So they can't do that.
Wow. Thank you so much, Oreolu Adetunde. It was a very fantastic time with you. So.
Okay, so
or do you want to give us any advice? Do you want to give us any?
So I would say that it's very important that people also try to educate themselves. Okay. I know that there's still a lot more efforts that needs to be done, from the regulatory point of view. Okay. And we still need, that has made, financial inclusion progress slow. Okay. So, but aside from that, we are seeing some positivity. The fact that the fintechs are booming, they are getting more funding. We have 4 unicorns, or 4 about 5 unicorns, as well as connectivity. That is definitely helping. But people, we just need to educate ourselves a lot more. Also you'd see that these things, I get that people don't trust the financial system yet, and I know that there's
like my friend.
Yes, like your friend. Yes. So, but I think there's been a lot. Central bank is doing a lot to regulate the banks and the fintechs as well. A lot of them are registered with them. So, you'd also want to check, make sure that whatever fintech or small bank, or it has some business doing with the SEC or things like that, to make sure that you're able to see how you deposit funds into your account on maybe a daily basis or on a weekly basis. I can see your cash flow management cycle, more to say. I would have more incentives to probably give you, a facility. And we're seeing that because of, the fact that our unemployment rate to me is really in the informal sector, and most of it is really driven by entrepreneurs. And it's not an anomaly. You look at countries like China, you look at countries
Japan.
like US. Exactly. Those economies are being driven by small scale businesses. Well, how do you enable and those small scale businesses is what's really contributing to the economic growth of those
even the
very
nation's
large
GDP.
Economy. So, there's still so much that needs to be done.
On the first segment of the program, of course, we had to take a large chunk of our time to really discuss in-depth, or give an in-depth analysis of this morning's discourse, which was, once again, for the benefit of those who missed out, financial inclusion in the Nigerian economic landscape, its meaning, significance, and endless possibilities. Hopefully, we'll provide more updates regarding that. We'll take a quick break and come up with the second and final segment of the program. So please stay tuned. My name is Rioja Opia.